Breaking news, the 2023 recession is here, but some investors are secretly profiting. What do they know that you don't? The top investors in the world are profiting on the stock market while the economy tanks and panic grips the world. They have a strategy that few people are aware of, and it is helping them make money in the midst of the chaos. Don't miss out on this once-in-a-lifetime opportunity to learn how to navigate the recession and come out on top. Discover the secrets of the world's wealthiest investors and learn how to take advantage of the market turmoil. This is your chance to turn the recession into your biggest financial win yet. For being too cautious in the market in 2022, Warren Buffett faced criticism. He didn't let that discourage him though. In fact, he invested a substantial sum of money in stocks, which was a wise choice in hindsight. The same thing transpired in both 2008's financial crisis and 2020. As everyone else was selling, the big investors were investing. These elite investors are now responding once more as the economy is in even worse shape. But what is their secret? How do they manage to make such successful investments during lean economic times? As the economy plummets into a state of crisis, many investors are left wondering how to turn a profit. But there is a strategy that has been proven to succeed time and time again. However, it's not as simple as just investing during lean times. No, there are 3 crucial principles that must be kept in mind if you want to come out on top. The first principle is to find businesses with a long-lasting competitive advantage. In a world where everyone is scrambling for a piece of the pie, you need to make sure that your investment will stand the test of time. Imagine a small city in England with no Thai restaurants. It seems likely the perfect opportunity for someone to swoop in and make a killing. But is it really that easy? Sure, the first Thai restaurant might do well, but what about the second, third, and fourth? As soon as a business starts to show promise, competitors will swarm in like vultures. So, how do you ensure that your investment will continue to thrive despite the competition? The key is to look for an inherent quality that sets the company apart from its rivals. A quality that cannot be imitated no matter how hard others try. This is what we call the mode. It's not enough to simply be the first to do something, as we've seen time and time again with companies like Snapchat, Atari, and Motorola. No, what you need is a company that has an irrevocable advantage, a quality that sets it apart from all the rest. As the story goes, capitalism can sometimes take unexpected turns, and so it did when a chemist founded the Coca-Cola Corporation. But little did he know what he was getting himself into. Who could have foreseen that Coke would become a household name and an icon of American culture? And despite what some may claim, the recipe for Coca-Cola is not magical at all, but rather kept locked away in an Atlanta bank vault, shrouded in mystery. But that mystery has not stopped others from trying to copy the formula, and it's easier than one might think. In fact, when Pepsi launched its famous taste test challenge, it simply offered 2 colas to participants without any branding and asked them to choose which one they preferred. The results were surprising, because Pepsi is a little sweeter than Coke. Most people picked it as the better cola. But when the 2 drinks were presented with their respective brands, Coke came out on top. So why does Coke have such a strong hold on the market when its product is so simple to copy? It's a question that defies rational explanation. Despite the fact that other companies frequently offer superior products, Coke's brand recognition is unbeatable. And in the cutthroat world of business, the power of a strong brand cannot be underestimated. A strong brand is like a fortress, protecting a company from market fluctuations and ensuring that customers will continue to choose their products over cheaper alternatives. Think of Ferrari, for instance. Despite the fact that there are plenty of other high-performance cars available for less money, the brand's popularity never wanes. And what about Louis Vuitton? Do their products really have superior quality compared to other luxury brands? Of course not, but people don't just buy the product itself. They buy the brand, the logo, and the prestige. But no moat lasts forever. Even the strongest brands can be challenged over time. The key for investors is to not only identify companies with strong moats, but also to keep a close eye on how those moats hold up over time. It's a challenging task, to say the least. There are countless competitors out there, constantly trying to steal market share and profits. Still, that's what makes investing so thrilling. It's a constant battle to predict which companies will survive and thrive in the years to come. After all, very few companies make it past their first year, let alone their 5th or 10th. The key is to look beyond the present moment and try to imagine what these companies might look like in 5, 10, or 20 years. It's a daunting task, to be sure, but for those willing to take the risk, the potential rewards can be enormous. In the world of investing, there's no such thing as a sure thing. Even a company as strong as Apple, with its powerful brand and switching modes, can't be taken for granted. But how can you tell if a company has a strong model or not? It's not always easy to see, especially when dealing with a giant like Phil Town. As the story goes, value investors are a crucial part of any investment strategy. But in the cutthroat world of Wall Street, having an information advantage is a rare and elusive thing. With so many intelligent individuals studying the same companies, finding an edge can seem impossible. Yet there is one edge that is stronger than all the others: time. Jeff Bezos knew this, and he always looked 5, 7, or 10 years into the future. By investing with a longer time horizon, Amazon was able to reap the benefits of patience, even if it took years for the returns to materialize. But on Wall Street, the game is different. Active funds are forced to think quarter to quarter, constantly chasing short-term gains. Value investors, on the other hand, are free to take a longer view. They wait patiently for the right opportunities and then hold onto those investments for years to come. It may not be the most exciting game, but it's one that has proven to be successful time and time again. With a focus on long-term thinking and patience, value investors can weather any crisis and come out ahead. Surrounding yourself with companies that have established moats and held them for a very long time. But there's another strategy: finding a wonderful compounder that no one else sees because they're not looking far enough ahead. And if you're willing to pay the right price, even if it seems exorbitant, you could still come out on top. Microsoft in the 1980s and Walmart in the 1970s are just a couple of examples. If only we had a crystal ball to see what companies would look like in 30 or 50 years. There's a crucial factor that can make or break your investment success, one that must never be forgotten. The truth is, there are only a handful of exceptional businesses among the thousands listed on stock exchanges around the world, and the odds of finding one are slim. But if you're lucky enough to discover one, you must hold on tight and never let go. One investor learned this lesson the hard way when he sold his stake in Ferrari thinking it was too expensive. Little did he know that it was one of the smartest investments he had ever made, and he would come to regret his decision for years to come. But the secret to investing in exceptional business is simple. Find them, hold on to them, and let them grow. It's a strategy that has worked for Amazon, Google, and Tencent, and it can work for you too. But you must resist the urge to cut your losses and sell out of fear, or you'll miss out on the opportunity of a lifetime. So, will you be one of the lucky few to find an exceptional business and hold onto it for the long haul? Or will you be among the many who miss out on the next Amazon or Google? The choice is yours, and the stakes couldn't be higher. Thanks for watching, and we'll see you in the next video.